Hey, what's happening, guys? Dan Darrow here with another Options and Play video update. So this, I guess this came up Monday during our option session, and today, I guess, has a little bit more relevancy because of what happened intraday. We had that breaking headline that the uh, they are thinking about possibly raising the uh, capital gains tax for wealthy individuals earning over a certain level. That was uh, that was less well received by the overall market. Let me put it that way. Stocks turned pretty sharply lower. Volatility spiked a little bit, and a lot of people's gut reaction when they see the market dropping really fast is to jump into VIX options. So whether that's VXX, VXY, kind of the same idea. These are either double or triple leveraged products that basically move if the VIX moves higher. And there have been periods in the past where the VIX moves and the VXY moves. I mean, they've really worked out great for options, but there's also been, probably more often than not, a lot of stretches where they've been miserable for options, right? And the biggest problem is that, like, due to like the double, triple leverage nature of these ETFs, is that they just keep gradually deteriorating, right? So, I mean, clearly from where it was last last March, way off that, right? And then, but just from where it was, over the last 2 months, even with like VIX, the actual underlying VIX, VIX, not really breaking down that much. I mean, this product has lost what, 30, maybe 40%, right? So it's because of the double, the triple leverage nature of it. And from an option trading perspective, it's more difficult because if you don't time it well and you have like this continuously kind of deteriorating, trending lower nature of the ETF, then it becomes very difficult to swing trade, right? And this is why I try to avoid swing trading the VIX, or I really have been kind of avoiding it just in general lately, is because you just keep getting this grind, like steady grind to the downside, right? So it's more about timing, right? For me, trades on the VIX revolve around a major event, like something I can pinpoint on the calendar where I say, okay, this is coming up. So, I mean, it was the Georgia runoffs. It was before that, it was the election, right? So when you have or during the primaries, like when you have a significant event where the likelihood of volatility being higher is, kind of easy to pinpoint, then it makes sense because you have like a reasonable window where you can expect this to move, right? If it doesn't move, then so be it. I mean, at least you have like a reasonable suspicion that it's going to happen within like a certain period. You can target options for a certain expiration, right? If you are just sitting in VIX options thinking, oh, at some point the VIX has to go because the market keeps going up day after day after day, well, then to me that seems like a lousy trade idea because in reality the VIX can just keep grinding lower because of that double, triple leverage nature of it, right? So my trades on the VIX, at least lately, so the last couple of years, have really revolved around like these major events when I can like look on the calendar and say like 2 weeks from now there's a big event. And sometimes it could be like a jobs report. I mean something else, or like a Fed meeting, right? At least some sort of idea of like when there's an event coming up that the VIX has a higher likelihood of potentially moving. If it works in my favor, great, right? If it doesn't, also have the time period to exit because like I know that like I got into it for a specific reason. It didn't work, so I'm getting out, right? So it's not just sitting in options just waiting for something to materialize, because I mean you just end up seeing this thing grind lower and premium evaporates, and then when you do finally get a pop, it might not even carry you back to where it was like the beginning of last month, right? I mean, if the VIX does get a pop, there's a chance that it won't even get back to where it was at the beginning of March, right? So just, food for thought. I mean, I've gotten asked about this a lot just this week because I guess Monday we were talking about it, and then today, I mean, it was, the headline-driven move. So it's just something on top of my mind. Wanted to like go over it, just kind of show you what I meant. And I know some people, they like to trade it. Some people maybe like look to get puts on it, right? Because if it keeps grinding lower, maybe look at like puts. But in terms of me like going on for like a bull strategy, it really has to revolve around something I can identify on the calendar as being significant. And if I can't, then more likely than not, I'm avoiding it. Okay. So if you like this video and you're looking for more information about hedging with options or swing trading with options, please follow up with the link in the description of the video for more information on options and play. Hope you have a wonderful night. Stay well, and I will talk to you all tomorrow.